The U.S. Producer Price Index rose 0.1% from a month earlier. The median forecast in a Bloomberg survey called for a 0.2% increase. For more on this, let's go to Allan Small. He's Senior Investment Advisor at IA Private Wealth. PPI, how much weight do you put in that, and how closely aligned is it to CPI? Usually, do they come in fairly close?
I would say so. They're definitely related. Obviously, PPI is the wholesale prices, and you hope that if those prices are coming down or going up, that will
the consumer gets that.
Eventually, it'll be reflected in the CPI. So both of them down this week in the U.S. CPI below expectation, now PPI coming in below expectation. So we really aren't seeing the inflation, at least the rising of prices as yet. Everybody's kind of bracing for when this is about to happen. Really, the only thing we're seeing out of the U.S. right now is a slowing labor market. But even their labor market, 4.2% unemployment rate, still near pretty much rock bottom levels. So that's why I think a lot of people are wondering, can the Fed actually cut rates at some point down the road? I know President Trump has asked for a lot of cuts.
Yes.
Wants a full percentage point cut. He's talking about Europe cutting, and here in Canada, we've cut. Whereas the U.S. has been on hold. So we'll have to see what happens. But I think the Fed, if we had an opportunity to talk to them, over a drink perhaps, I think Jerome Powell would say to us that he believes inflation is coming and higher prices are coming. And I think it's hard to dispute that.
Okay, so it's a little bit of a head scratcher that the numbers haven't really moved that much. And it makes me wonder then, does that mean there's a much more dramatic turn to come?
Quite possibly. When you think about what businesses did at the beginning of the year, when they knew that these tariffs will be put in place, talking to businesses, they were telling me that they were bringing in 3 to 6 months worth of inventory. So here we are, kind of middle of June. Probably you're starting to see inventory work its way through, at least the cheaper inventory. Now all the new stuff that is coming over to the U.S., Canada, wherever, I think you're going to see higher prices, especially obviously in the U.S. So anything coming over from China, you're now going to look at a 55% tariff put on China. And even though it's a lot less than 145% where it was just a few weeks back, it's still pretty high. And I think that is going to eventually work its way through to the consumer. So I think everybody is bracing for these higher prices. The U.S. consumer is bracing for it. I think the Fed is bracing for it. Perhaps even the president is bracing for it. I know he's made calls to Walmart and Amazon telling them you need to swallow a lot of these higher costs and not pass it through to the consumer. But we'll have to see what these businesses do. The one I'm fearful of most are the small businesses. They're not able to swallow those higher pricing as much as the big ones are. So I think it's in the small business areas where you're going to see the most effects.
Okay. Did the outcome of those 2 days of intense talks with China and the U.S. quell any fears? I mean, obviously, there's still a 55% write-up on Chinese goods. That's a big number. But did it quell any fears about ongoing threats of a trade war with China and U.S.?
I think it quelled those threats. However, I was hoping for something a little bit more substantial. And it may come because they indicated that they're going to be in talks for, over time going forward in the coming weeks. But I was hoping for some sort of chips deal. And one may still happen. And I think names like NVIDIA, AMD, those probably would have been the winners if we heard that the U.S. would soften their restrictions on sending or allowing these companies to send chips to China. I thought that was, and I think most of us thought we would trade, or the U.S. would trade chips for rare earth materials. Yeah. And it didn't happen, at least not yet, at least no announcement as yet. So yeah, it quelled the fears. I don't think the trade war is on. I think the main thing that the U.S. wanted was access to these rare earth elements. They're going to get it, at least so it looks like. But did China get everything that they wanted? I don't believe so, because right now, at least what we're hearing, chips are not going to be sent. And right now, you still need to get a license to send chips to China.
The clock is ticking down for all of the other trade worries, meaning that next deadline of July 9th for a number of trading partners for the U.S. And the American president says he might just sort of send a letter out and just tell people what it is, which means it's not clear if there are actual discussions about it, Canada aside. Are you concerned about those deals getting done? Do you think it might end up being, as the president says, just a letter, here it is, thank you very much?
I am concerned, because I don't think the president can go back to those reciprocal tariffs that he announced on April 2nd. Those are way too high, and I think the market, whether it's the bond market, the stock market, or just the average investor, all of us, we've come a long way since then. So what is he able to do? I actually think he's in a bit of a bind here. If trade agreements aren't made, there's a lot of backlash that he could see from Republicans, from the Americans in general. We already know his approval rating is not as high as he would like to see it. And there are obviously risks such as empty shelves come the holiday season at the end of the year, U.S. Thanksgiving, or even the back-to-school season. So I think there's a lot there that I think the president isn't telling us. I think he wants to make deals. I think he needs to make trade deals. Now, whether he sends out a letter and says, this is the trade deal, take it or leave it, I still believe there'll be negotiations around whatever he sends if it gets to that point. So I don't think he has all the cards that he claims to have had over the last many months. I think right now, a lot of countries seem to be standing firm, and I think they realize that the president is under the gun a little bit to get some kind of deals done, and if they hold firm, maybe they'll get a better deal with the U.S.
Where are you putting money these days? What do you like?
Well, it's interesting. You know, we always talk about diversified portfolios, and I think the way the market's going today, very similar to how it went the last few years, the growth is really in one area, and that's technology, and especially artificial intelligence. So I guess if you're looking for growth, that's the area you want to look at. You know, the Mag 7, for example, we saw earnings out of the Mag 7, year-over-year earnings, around 27, almost 28% compared to the other 493 stocks on the S&P, coming in just over 9%, 3 times greater. So I think if you're an investor, I think it's tech is where you want to look at. Not all tech, because I think a lot of tech names now are fully valued at the very least, maybe even overvalued. But I still believe there are some names that are still undervalued in big cap tech land that I think you want to take a look at.
Okay.